Nigerian bourse reversed gains from previous sessions, dipping 58 basis points. The decline dragged the index back below the 30,000 mark after a short-lived recovery. The banking sector was the only bright spot on the exchange, boosted by UBA and Zenith Bank, while the oil and gas sector was the worst performer on the day, dragged by Owando and Seplat. Market activity remained around the same levels as Tuesday's sessions, as a higher volume of trades was offset by a lower turnover. Market capitalization also depreciated by 0.59% to close at 11.24 trillion naira, compared with a marginal depreciation of 0.02% recorded on Tuesday. The three most actively traded stocks were Japol, Oil and Maritime Services, Access Bank and UBA. Sam Chidoka, MD and CEO of Kairos Capital, now joins me for an equities-focused discussion. Sam, glad to have you on the show this morning.
Thank you.
So we saw some bit of a flashlight on Monday. The market was actually looking like it was going to close in the red, and then did a surprise turnaround to close in a very marginal 0.01, but a green. And then all of those gains were dragged back to the losses in the last closing session. Talk us through the drivers of the trends that we are seeing impact the markets at this time.
Okay, so what we've seen in the markets is a situation where on Monday you could say the market was flat, basically.
Flat, yes.
That's the best way to describe it, 0.01%. The market was flat. So what we've seen year to date is the market, every time the market has had little gains, people come back and take profit, and then those gains are reversed. So the all-share index has been reversed, has been oscillating around that 30,000 mark for a while now. Year to date, the market has lost about 5%. But if you track back in the last 1 year alone, the market has lost over 20% in the last 1 year. So that shows you that there isn't a lot of confidence in the market. That started leading towards the elections of last year. We were hopeful that after the elections, you will see the foreign investors come back and you see local investors also inch up with investments in the market. But that hasn't happened. Rather, what has happened is more people have shifted to the fixed income market, where yields have been good. Even with the fact that prime rates have been reduced by the CBN, and you expect yield to come down in that space and people to shift their investments towards the equities market, it quite hasn't happened. And then we had Q1 results start to come out. The banks had a good showing. I mean, we saw the result from Zenith Bank, the result from Access Bank, the result from GT. So what has happened is that has helped to drag the banking subsector up, but hasn't helped to drag the whole market the whole market up. Also, the failures we've seen in the performance of the stocks, especially in the oil and gas space. So if you look at what happened yesterday, what drove the market down, you look at a stock like Seplat, you look at Owando, the oil and gas stock not doing so well yesterday, and that helped to drag the market down. But what we see generally is a situation where people are coming in, make some money,
and then
take it out.
Taking off. Now, you talked about the oil and gas sector. No matter how much that sector has seen a drag, and we did talk about this earlier, one particular stock has been surviving, and still you find their name on the volume, most traded volume, more often than not, Japol. And to what extent is this connected rather to talks about acquisition that's been going on for a while now regarding that particular stock?
So sometime, I think this talk started maybe 12 to 18 months ago. There was a foreign company that wanted to have major stake in Japol. And so when that hit the market, you found a lot of people trying to take position.
Market reactions.
Yeah, but it fell through. And now there's fresh rumors of another would-be takeover of Japol Maritime Services. And people are taking position again. That's all we see. We haven't seen anything in the numbers to suggest that it's a value game. We think that it's just because of the rumors in the market that some would-be investors are looking at it seriously and hoping to come into Japol.
So it's still a wait and watch approach. Talk to me on the significance of the 30,000 mark. It's the second time we're falling below that mark in the month of April.
It's more psychological than anything. So we've been oscillating around it, and it's just become psychological. If you remember, when the market tanked sometime back, maybe 2008, there was this 17,000 points mark
yeah.
Where the market, if the market ever went below that, everybody was like, if the market went above that, and it was a psychological point. So that's what's happened in the last few months. It's not because of anything significant about the number 30,000. It's just that it's become a psychological point. When the market trades over it, it looks as if we're doing well. When the market trades below it, it looks as if. So market would always find its equilibrium. And today, perhaps our equilibrium is around the 30,000 mark. We don't think there's anything significant about that number.
So to what extent is the equities market able to, is the word survive now, the wait and watch approach that we have been seeing by investors, talking about their sentiments?
Well, so for an investor in the market, what we would say to you is look for value investments. Some are doing wait and watch. Some are investing, making money, and exiting almost immediately. But there's still value in the market. A stock like Sterling Bank, in the last 1 year, in this period that the market hasn't done well, that stock has done very well. CNI Leasing has done well in that same period. So there's still value in the market. If you would look right and invest right and wait it out, you will still make money from the market.
So oil and gas sector taking a hit at the moment. To what extent can we say that the oil prices going up could support those stocks? Is there a connection? Can we draw one?
Yeah, we could draw a connection, especially with those who are in the upstream business. So the Seplat and the Oandos of this world, the Conoils of this world, you'd expect that as oil prices inch up, but you know, with oil prices also, we've been there and done that. So it goes up and it comes down. It's been a swing that we've been experiencing in recent times. So because America is not going to renew the waiver that they had given Iran, and so you saw the oil price tick up immediately. The prognosis is that oil price is going to continue somewhere between the $70 and $75 mark. At that place, it might be good for the oil companies. But the question is, how does it translate to bottom line for the companies traded on the Nigerian Stock Exchange?
Let's have your near-term outlook for the equities market ahead of the May 29 Swearing Index, which is what most investors that have been told are waiting for as part of the macro dynamics.
So there are a couple of things. The market is watching to see what happens with the government and the ministers that are going to come. The market is watching to see what happens with the CBN governor. His tenure is up. The market is watching to see what happens with the economic team, who's going to be part of it and who's not going to be. All those things will impact on the market. So it's not just about May 29, but I'm hopeful that as announcements begin to come, will the CBN governor stay? Will a new CBN governor come? What is policy direction? Who are those that are going to help in running the government? Are there people that the market believe are forward-looking and will help to grow the market? If that happens, then you will see an uptick in the market. If the reverse happens...
Okay, thank you very much for your time on the show. Sam Chidoka is the MD and CEO of Kairos Capital.